Hi, I'm Thomas Fontes with Accounting Services Unlimited. Andrea?
Hi, and I'm Andrea with Accounting Services Unlimited. Today, we're going to talk about keeping business in business. So, Thomas, not everyone is your client. Why is that?
Correct. Well, when you first start out in business, you're trying to get clients. You're trying to make enough money to survive, making sure that, you get your bills paid. So you start taking on anyone and everyone that wants to come in. And so at least for us with accounting services, when I first started out, I started off as inexpensively as possible. And as time went on, I started realizing that I was really working to survive, not working to become really profitable.
Mm-hmm.
So as time went on and, you add employees and your expenses go up, you realize that those clients that were using you to be as cheap as possible, they're looking, that you're as cheap as they can find, are really going to start to take advantage of that. And they're going to hold it over your head. And the thing is, the loyalty is never going to be there if you're the cheapest person.
Not.
Yeah, the loyalty is never going to be there. And unfortunately, you suffer through it where you bend over backwards for these people that you're making no money on. And as soon as somebody comes in cheaper, they drop you like a bad habit after all the work that you've done. So that's business. So what I've learned is, guess what? Not all clients are your clients. Make sure you stick to your guns when it comes to your pricing. Value the work that you do and value the people that work for you that do the work that you do. Because if your clients are taking advantage of you or are beating you down on price, you're always going to have those problems. And one of my favorite lines is, if your clients are having cash flow problems, you're going to have cash flow problems.
Absolutely.
So the name of the game is profitability, right? You want to make sure that you're reasonable, but you want to make sure you're profitable. You don't have to get rich. Yes, you do. But at least, you keep your clients by doing a good job, not necessarily for being the cheapest. So you have to keep that going.
Right. I've always learned too from you and from others that have mentored me, you never want to sell on price. You want to sell on your service and what you're providing to your customers. And then you have a customer for life.
Right. You would help. But yeah, I remember 10, 15 years ago, we had a client that we really went out of the way for. It was after a hurricane. They'd had some financial issues. And we, worked with them, got their accounting done, got their books done, got them all cleaned up in order to submit to insurance companies in order to get paid. And we were very excited for them when they finally received the money for the damages and for business interruption and everything. And they stiffed us and they ghosted us. They never paid us. And to this day, they never taken another one of our phone calls and everything. So it happens. So the client that somebody's asking me for over there in the corner is, how do you know when to let a client go? Okay, that's a good question. So that's a toughie. There's two parts to that. Always, of course, what we just talked about. When the client begins to mistreat you or abuse the services that you're offering. If you offer one thing and they want you to do B and C, but they don't want to pay for it, that's a good time to shake off the client, right? Now, the other side of that, that's very important to me, and I'm not just saying that because you two are in the room, is also if the relationship becomes a little abusive between the client and your employees, the people that work for you, the people that are actually doing the work. As I like to say, if a client wants to call me and yell at me about something, it's no problem. I own the company. But nobody gives them the right to abuse somebody that works for you. And to me, it is way more important to maintain the employee than it is to keep a client that has that habit or has that attitude. And we've done it. And you'll know when those times come. My father told me when I first started out, he says, one of the best days you're going to have as a business owner is the day that you fire your first client, and it doesn't hurt your bottom line.
Right.
So yeah, that's a good one. But so the positive side of that is it's fun when you work with a client that values what you do and you get the thank yous and you get the gifts all of a
Right.
sudden that,
Yeah.
that they send to your office. For our office, it's usually food for some reason.
We'll take
The
it.
office can the office can take food. They'll mow down anything they bring in, whether it's donuts, whether it's Mexican food, since it's Cinco de Mayo today, in case anybody was wondering when we're filming this. And or even if it's artwork. I mean, we've had all kinds of gifts, and that's always the fun part. Or when somebody that does the accounting for them or whatever goes to the restaurant or meets with one of the lawyers for some reason, or goes out and goes shopping and walks into one of our clients, where they see the appreciation from the client,
Right.
where they get the free appetizers, they get the free dessert, or they get a simple thank you. Or my favorite thing was, I don't want anything for free, but I like it when the owner will sit with me and we'll
Yeah.
chat for a minute.
Right.
So I mean, that kind of thing, especially if we're drinking. But that's the kind of thing that's really, really, really goes a long way.
Right.
But
I think
yeah.
what goes a really long way is just when you can take this off of the shoulders of a small business owner and they're just like, oh my gosh, I feel relieved. I'm so glad I don't have to worry about this anymore. I know it's in good hands with you guys. I know I can call if I have a question, or I can stop by the office. I mean, I got told that last week. They're just like, oh my gosh, I'm so glad you all are handling this.
I don't know if we talked about it in the last podcast, but it's almost like marriage counseling sometimes. Where the wife will be doing the books and has been doing the books, and they come in for a consultation, and for the first time, the wife admits she hasn't been doing the books.
Right.
And the husband is shocked, and everybody stares at each other. And then we tell them that it's easy for us to catch them up, and we'll catch them up, and then all of a sudden, they have a happy marriage again, and
Right.
and they'll go on vacations now, and they love each other, all because of ASU.
Right. ASU, solving everyone's
Problem,
problems.
right? In marriage counseling.
So let's talk about innovation in the business. What can businesses do to lower the overhead and increase profit? What have you advised some of your clients to do?
Well, that's a really good question. So, when you innovate, you look for ways to make things better, right? That's the very definition of it. So you try to come up with new things that'll make things either better for your clients or simple, simpler, or maybe more, a little clearer for them. In our industry, innovation comes in several forms. One is, of course, looking for ways to get information from the clients, process it, and get it back to them as fast as possible. Now, are we going to use what we have? Yes. Are we going to buy other softwares and everything to try to use to try to make things better? Of course. What do I mean by that? That means that instead of having one person working for a client, maybe we'll have 2 or 3, and we'll have separate eyes, and we'll be able to improve things in their accounting. So that's innovative. The second thing is improve on reports. Add some categories or take categories off of some reports that aren't necessary, and maybe share the type of information on a balance sheet that might help a client make the right decisions. I'm smiling because I'm thinking of a client that I had dinner at yesterday, and he was talking to me about thanking me because he didn't open a second restaurant. His restaurant that he owns now is doing great. It's killing it. And so, of course, he has people coming in, see a full place, and like, oh, you should come check out this other location, or maybe you should try this other concept, or everything else. And so I sat with them and I said, don't do it. You're cleaning up. You're making money.
Right.
Why would you risk what you have now if it's not worth it? Now, don't get me wrong. If there's a spectacular location or the right kind of financing, it presents itself, or there's all of a sudden a concept that's really resonating, and it might work, sure. But the numbers are going to tell you whether or not it's time to do something like that. And that's what we use, and that's what we use numbers for. We've gotten it down to the point to where we tell clients, for example, if we see a lot of repairs on a piece of equipment in a print shop or something like that, where we'll tell them, hey, listen, I don't know what machine it is that you keep paying every other month for these repairs, but you've spent $7,000 on a $10,000 machine.
Right.
It's time to buy a new one.
Time for a new one.
And
right.
maybe sell the old one to your competitor. Stick in with it.
Right.
But yeah, that's kind of what, that's kind of going back to the original question, which is kind of innovative. Those are the kind of things that we should be looking at that keep making things better and better and better as time goes on.
If you had one piece of advice that you could give to every brand new small business owner, what would it be? That's a tough one, I know, because you usually give them so much information in those initial meetings. I mean, but what's the one thing you would want a new business owner to know today listening to this podcast?
Keep it small and keep it all. The idea is that when you get started, a lot of people think, oh, well, I'm going to open up, like I mentioned, a print shop, or I'm going to leave my law firm and I'm going to open up my own law practice. Or of course, the restaurant example. And they think that the minute they open the doors, they have to be fully staffed and have all the latest equipment and everything ready to go before they even kick the doors open. And that's one of the biggest mistakes we see. If you are that print shop, wait for the clients to come and tell you what their needs are. You have an idea and you're going to have some basic stuff. And also, don't load yourself up with payroll.
Right.
The fastest way to eat through financing or eat through the money that you start up with is payroll. When you have people there and they're not doing anything, not because they're bored, but because there's nothing to do, that's the worst thing. So,
work with what you have.
Yeah, keep it small and keep it all. Keep everything as tight as you can from the beginning.
Yeah.
And then as you need, you buy more equipment, you hire more people, you increase your advertising, you do all the things that you need to do to get rolling.
I think that's $1 million piece of advice. I really do.
I hope so. Somebody should pay me $1 million for that piece of advice. Talking about becoming more profitable that I just mentioned, right? Of course, I'm mentioning at the beginning, like you asked, what happens, keep payroll low, keep your, don't overbuy equipment and all those things. Mm-hmm. But once you start rolling and you see an issue with your bottom line, I mean, you have to have good books to show you, what's happening, how much is coming in, what are your costs? If you're the print shop or you're a restaurant, print shop has ink and paper and vinyl and all those things. And the restaurant's going to have food. That's going to be your cost. That's something you're reselling. If you're a mechanic shop, that's your parts and all those things. Mm-hmm. So the best thing you can do in order to improve your profitability is to help cut those costs. Call your vendors, ask them, hey, can you give me a better deal on that? Is there a different brand that I can use that has the same quality or better quality? Sometimes you even find that you can find better things cheaper just by asking. And the other thing is, a lot of times people think that the pricing that they give you is set. Right. When you look at your books, you can see throughout the year how much you have spent with that particular vendor. And that year-to-date number that we give you on your profit and loss statement, that year-to-date number tells you, okay, I've spent so much with my meat vendor, and I'm paying the same price I was when I first started, or from the beginning of the year. Mm-hmm. And I've spent all this more. We've sold so much more, and I'm paying the same amount of money. So when you make that call, that helps drop that cost. If you save yourself 5 or 7% on that cost of goods, that goes right to the bottom line. And then, God forbid, you look at your expenses. What are you spending money on? Are you going out to eat? Are you taking people out to eat a lot? What bills are you paying that you think you could cut back a little bit? Mm-hmm. You don't need to slash across the board in order to tighten things up. You just need to find 2 or 3 or 4% on every expense that you can do something about. Of course, you can't do anything about your electric bill, unless you turn off lights or, use your AC less, or, if there's a piece of equipment that uses too much electricity, things like that. Those things you can do, but sometimes you'll find things in your P&L that even gas, if you're taking too many trips to pick up equipment or one of your things, one of your costs from somewhere. I keep using restaurants, but if you're having to make 2 trips to a grocery store or something because you're disorganized, well, get organized. If you find yourself going to buy ice constantly because your ice machine keeps going on the fritz, well, get yourself a new ice machine because eventually that stuff catches up with you. And all those little things you cut back on, every little detail that you can find, it all goes right to your bottom line. So if you cut back 5% in your cost of goods and 5% in your expenses, only 5%.
It's huge.
Only 5%.
Yeah.
And then let's say you raise your price a touch, 5%, 7%. Let's say it's 5%. You just added 15% to your bottom line. Now, if you're a company that nets out maybe, or the gross is $50,000 a month, well, that's $7,500 that's going to be on your bottom line. That's $7,500. You save 15%, $7,500. It goes right to the bottom line. What can you do with $7,500? That adds up to over almost $85,000 a year more. And that goes into your pocket or your wife's pocket in my case. Yeah, something like that.
Right. I feel like too, with some of these vendors, the price is negotiable once in a while because sometimes they will run promotions. Like the national people will run promotions through the vendors, like Cisco. For example, Dole might say if they buy X amount of cases, we'll discount it a little bit. I mean, but do they always relay that information? No. So it's up to you to always ask and do your homework and say, is there any room for for me to get a small discount?
Right. Yeah. I mean, and again, not just with restaurants. I'm amazed at mechanic shops and body shops that do the same thing. They think that because they buy from a certain vendor all the time that they can't get a better deal ever. And a lot of times all they have to do is keep 2 or 3 extra parts in inventory and they might save 10 or 15%.
Right.
Especially if it's a consumable, somebody that, changes oils or something like that. I'm always amazed at how it's the little things. All you have to do is pay attention. Sometimes the hard part is also for a business owner to pay attention. So it's our job as accountants, as bookkeepers. And that's what we do at ASU is we make sure that we meet with the client often. We communicate with them continuously. We're not somebody that you're going to call and say, hey, there's, you haven't heard from us in 3 months because you haven't seen any reports because we've been so busy. No, we're never too busy for our clients.
No, our doors are always open. They can always come to the office or call. That's why I love working for this company because we're approachable. We're approachable. We want to make sure we're doing a great job and we're local and I love it. I mean, I love working for this company.
So I'm Thomas Fontes with Accounting Services Unlimited. Thank you for joining us today. Andrea?
And I'm Andrea Sanji. If you like what you hear and you want to learn more, like, subscribe, and share.